Hi, welcome to our 2-Minute Tuesday for September 16th of 2014. My name is Roger Balser of Balser Wealth Management. Our title this week is Back to the Future. Recently, Piper Jaffray's senior technical analyst Craig Johnson wrote in their Informed Investor Report that today's market looks a lot like the 1950s. As market technicians, he wrote, we often use history as a guide to understanding current market environments. 2 years ago, we wrote our SPX 2000 Next Great Equity Rally. In that report, he drew comparisons with the latter stages of the 1970s bear market and the start of a new secular bull market. But at that point in time, the S&P was still below its 2000 and 2007 highs. However, the comparisons with the late 1970s he believes were good. He now believes a better comparison is with the early 1950s, thus our title, Back in Time. First, in both periods, the U.S. economy was just starting to emerge from an extended period of weakness. As you can see in the chart, the broader market has been in a secular consolidation range for more than 10 years. We've called this a secular fair market. Second, similar to the bear market in the 1940s, the bear market that began in 2000 has had two well-defined peaks before breaking out to new highs. Third, interest rates in the United States in the 1940s and 50s period were near historic lows. They are similar to what they are today. Thus, Mr. Johnson believes, based on history, the broader market has now entered the early stages of a secular bull market that he believes still has a lot of room to run. In prior secular bull markets, investors made 5 times their money from 1952 through the mid-1960s and 15 times their money from 1982 through 1999. If you remember back, we have been talking and we have been stating that we've been in a secular market since April of 2009. It amazes me that these analysts that are coming out at these major firms are always behind the 8 ball. One thing that I'd like to bring to your attention, though, is with my conversations with many investors, that there remains a focus on lessening losses. They're always waiting for when's the other shoe going to drop? I think there's been some major psychological damage that's been inflicted on investors with the last 2 markets. They can't seem to see anything but risk. At Balser Wealth Management, we employ strategies that could possibly help mitigate the downside risk. So if you have a question you would like an answer to regarding your investments, feel free to pick up the phone and call me. Or you can shoot me an email to roger@balserwealth.com. I'd be happy to answer any question you may have without any cost or obligation. Thank you again for listening to our 2-Minute Tuesday. And until next week, invest smart to profit wise.